Military homeowners are getting screwed over and making terrible financial decisions because of inaccurate and misleading information. Here's what to look for when you're being solicited for a streamlined refinance, because you're no doubt getting tons of mailers and possibly phone calls and text messages nonstop right now. Behind me is an actual letter one of my clients received about a week ago. Now let's zoom in and get some more details. They're saying 4.875, and based on his current loan, he'd be saving $200 a month. But what you don't know from looking at this is their estimated loan amount is the same loan amount we closed a year ago. Within a year, you're not paying down that much of your principal, so any of the loan costs, title, taxes, VA funding fee, lender fees, if they're not adding it to the loan amount, then it's going to be paid out of pocket. By financing it, you're increasing your loan amount and your savings is going to go down. Question is, well, how much would the savings be if we finance these costs? If you were to finance all of the costs associated with this loan, his monthly savings would only be about $110. So not really as exciting as $200. It's still a good savings, but the question now is really, what are the costs? How much am I financing, or how much am I paying out of pocket? The fine print on this letter says they're going to charge 1.563 discount points and 1% origination fee. So that's over 2.5% of the loan balance as a cost. So for this proposed loan amount, it's almost $9,000. And also, it's important to note that they are basing this off of a 720 FICO score. This guy actually has a little bit lower than 720, so his costs would most likely be higher. How do I know this? Well, if they offered the same terms for someone with 700 or 680, they would have had that as the minimum score on the letter and not a higher bar. Keep in mind, this $9,000 still doesn't include prepaid taxes, insurance, interest, title insurance, attorney, and funding fee if there is one charged to this loan. Is this a lot of money for a refinance? Well, we got to look a little bit deeper. Whether something is expensive or not really depends on what the benefit is for what you're paying for. Any industry, there's always someone willing to work cheaper. A lot of times that comes with a loss of service, quality, communication, you name it. Sometimes paying less for something does come at an actual cost. In this case, he'd be paying $9,000 to save $200 a month, which breaks even after 44 months, so almost 4 years. And when you factor in any of the other costs, that's going to extend how much longer it takes to break even. And if those costs are financed and the monthly savings drops down to $110, well, that becomes more like 9 or 10 years to actually break even. What if you're okay paying this money to save $200 a month? Well, the VA has something to say about it. If the cost of the loan divided by the monthly savings is more than 36 months, they don't allow it. So in this case, just the loan cost alone invalidates this loan. So this wouldn't even be possible for this particular lender, for this client. Now, for comparison, I priced out this exact scenario, but using his actual credit score with my lenders. And as is, we are several $1,000s cheaper in cost. So with our loan, we would actually meet the 36-month requirement. But still, whether this is a good deal for the client really depends on their long-term and short-term goals. If they're definitely selling in the next 3 to 4 years, then I wouldn't do anything. It doesn't make sense to pay anything up front for monthly savings, whatever it is, if they're not going to see the benefit of the cost. Now, long-term strategy, if they're going to keep the house for many years, whether that's the house they want to live in forever, or maybe waiting 10, 15 years for the kids to grow up, or maybe they want to turn this into a rental at some point, then it may make sense to do something. Finance now, lock in current terms, and eat the cost, knowing that you have the monthly savings guaranteed. Or you can wait for a better market. Now, by waiting, you don't know how long it would take the market to improve, if it does, and by how much. Even if they time it perfectly and the market doesn't improve as much as they hope, there still could be a cost for the loan, although maybe not as much as today. However, what they lost by waiting could be more than if they just took action now. If you're getting solicited or you're interested in seeing what a VA refinance will do for you, if you're watching this on TikTok or Facebook, I'll have a link in the comments. And if this is on Instagram, there'll be a link in the bio. Click on the link and fill out some contact information. I will personally reach out. We will go over your unique situation and put together a plan to see if something can be done to better your financial situation. Thanks for watching this far. I appreciate you.